Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of big business so you do not have to. Today we are digging into EOG Resources Incorporated's latest report, and let me tell you, they have been busy refinancing their debt. So EOG Resources Incorporated, a big player in the oil and gas world, just announced they are shaking things up with their borrowing. This filing is all about putting a new credit agreement in place. They are essentially swapping out an old loan for a much bigger new one, and it is worth a cool $3 billion. Think of it like upgrading your car loan to get a better rate or a higher limit. This new deal, called a revolving credit agreement, is in effect as of the 3rd of December 2025. What does revolving credit mean? It is like a credit card for big companies. They can borrow money up to a certain limit, pay it back, and then borrow it again. They are retiring their old agreement, which was worth $1.9 billion, and stepping into this $3 billion facility. This means they have more flexibility to borrow money if they need it for operations or future investments. This new credit line is set to mature in December of 2030, which gives them a good long runway. But here is a cool detail. They have the option to extend it not once but twice for an additional year each time. That is if the banks are cool with it, of course. And it gets even better. They can ask for their overall borrowing limit to be bumped up from $3 billion to a whopping $4 billion. This shows a lot of confidence from them and their lenders, suggesting they anticipate needing or wanting access to more capital down the line. Now, how do they pay for this money? Interest rates will be tied to something called SOFR, which is the secured overnight financing rate, plus a bit more depending on EOGs. Creditworthiness, essentially, the better their financial health, the lower their borrowing costs. It is a pretty standard setup for large corporations. They also have to play by certain rules, like keeping their total debt from going over 65% of their total capitalization. This is a key promise to the banks, showing they are not going to overextend themselves. It is a sign of responsible financial management, important for maintaining their investment grade status. So what happens to the old credit agreement? Well, as expected, it is being terminated. This is just a formality, really, to clean up their financial records now that the new and improved credit line is in place. This section confirms that they have indeed entered into this new financial arrangement, and as of the date of the report, they had not actually borrowed any money yet under this new facility, which is pretty common when you just set up a new credit line. The actual details of this deal, the full agreement, are filed as an exhibit. This is where all the nitty-gritty terms and conditions are laid out. Though for us, the big news is the size of the facility and the implications for EOG's financial flexibility. Now, looking at this whole move from a bird's eye view, EOG Resources Incorporated is clearly positioning itself for the future. Securing a larger credit facility means they have a robust financial backstop, which is crucial in the often volatile energy sector. It allows them to weather market downturns, fund major projects, or even pursue strategic acquisitions without being immediately constrained by cash flow. The increased capacity suggests confidence from their banking partners in EOG's long-term viability and management. However, it is important to remember that having access to more money also means the temptation to use it. They will need to be disciplined in how they deploy this capital to ensure it is invested in ways that generate strong returns. Otherwise, this increased debt could become a burden. The 65% debt to capitalization covenant is a good safeguard, but market conditions can change rapidly. So, while this new credit agreement is a positive signal of financial strength and flexibility, it also brings a responsibility to manage that increased capacity wisely. Alright, that is our quick decode of EOG Resources Incorporated's latest filing. What do you think of this move? Does it signal strength or potential overreach to you? Let me know your thoughts in the comments below. If you found this breakdown helpful, give us a thumbs up. It really helps us out. And of course, subscribe for more insights into the corporate world. Don't forget to join our Discord community, linked in the description for more discussions. Thanks for watching, and we will see you in the next decode.